The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Life insurance is one benefit I hope I never reap the rewards from. I'd have to be dead for that to happen. That being said, I don't want to leave a burden for my family. With me today are Ray and Raheem. Ray is a government worker and Raheem is the owner of Max Furniture. Welcome, Ray and Raheem.
How you doing, Sybil?
Great. Thanks for being on the show.
Thank you for having us.
Now, Raheem, I hear you even have a sofa named after me.
We do. We have the Sybil sofa, and believe it or not, it's the bestseller, one of our bestsellers for sure.
I love that. Let me guess. It's chic and practical and will last forever?
You got it. That's what everybody loves about it. So,
well, tell me your story.
Well, Ray and I met about 4 years ago. No, we met longer than that. I'm already in trouble here.
8 years ago.
But 8 years ago, and I tend to not think about the first couple of years because we didn't really like each other through the first couple of years. But then we became pretty good friends, and we organized some charity golf tournaments together, and some of our friends who were around us kind of saw something that we didn't and said, you know, you guys should probably think about going try it out pretty much, and we have, and we fell in love, and we got married about 6 months ago.
Yeah. Well, congratulations.
And we're still going strong.
Yeah.
Good. So
That's good.
You learned not only to like each other, but love each other.
Yes.
And now you're planning on building a future together.
Yes, you bet.
So what's your big question for me today?
Today we really wanted to come to you because we are really fighting with this idea of life insurance, and it's kind of like for us going to the dentist. Like we know we have to do it, we don't want to, and we feel like if we leave it too late, it could cost more. You know, it's just one of those things you kind of ignore and don't want to talk about ever.
We're not sure how much, we're not sure what we need, we don't know how long, what's the payout going to be for either one of us.
Well, that's great. I'm going to help you go through some of that today.
Awesome.
So tell me a little bit more about where you're at now with debt load. Do you have a mortgage?
Yeah, we do have a mortgage. We own a condo, and other than that, I don't have much debt, but I guess you have.
Well, I'm self-employed, so
right.
So I definitely have some business debt, but in terms of personal debt, we don't really have too much at all. No, we keep it pretty tight at home.
And when it comes to the business side of things, that's a whole separate discussion on what insurance you're going to need.
Okay.
Really, the easy way to look at it is, it's terrible, but we have to visualize one of you is gone. And we run through both scenarios.
Okay.
So we'd have a look first, if something happened to Raheem, Ray, are you going to be okay? And how much money do you need to live on? And what bills need to be paid so that you're not feeling any financial burden, and vice versa. Notice how I picked on Raheem first?
Yeah, no kidding. Like, I'm already gone.
Well, women tend to live longer than men.
Great, perfect.
So lots of money.
Maybe we drive them to their grave.
So you're trying to put a price on my head already.
Oh, yeah.
So we're going to go through the calculation that you need. So don't go away. When we return, learn the basics of calculating how much insurance you need. We're back with newlyweds, Ray and Raheem, trying to figure out how much insurance they really need. Ray and Raheem, we want to make sure that if something happens to one of you, you're not leaving a huge financial burden on the other. I know it's kind of awkward talking about death, but if we're prepared, hopefully it won't happen for many, 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 many years down the road.
Sounds good, yeah.
So what are some of your other goals? Because I want to make sure that we have everything covered.
Well, I think ideally, like right now, we own a condo, so we'd like to eventually buy a bigger home and start a family. We're having the debate whether we're going to have one child or two. And we keep going back and forth on that.
Depends on the day.
Now, does one of you want one and the other wants two?
No, we're actually quite in sync in terms of we both are jumping back and forth, and a big question mark is, can we afford it? What's the financial burden with having children and having multiple children? So yeah, we both don't have. It's not a battle. We just don't know. You
know, you just make it work. I think after you have your first child, you'll just know whether you want to have another one or not.
That's what we're hoping, yeah.
Don't overthink it. Just go with the flow.
Oh, great.
What are some of your other goals? Would you like to retire one day?
Eventually, yes. Retirement, travel.
Okay.
Yeah,
at the
we'd love to go to
house.
Greece. We'd love to. I mean, I think right now our long, short-term goal is definitely saving up to buy a home because it's not very easy to
the down payment.
to get the down payments and stuff, especially when we've already invested in a condo as well.
Well, you've got a good start. You've got a condo right now, so you're building up some equity there, and you'll be able to transfer that equity if you sell that condo and move into another home, upgrade.
Oh.
Now, there may be an option to keep that and save up a down payment to
That
buy
would be
another
love
home,
that.
but that's a
you
whole
want
other
more and
topic.
more, don't you? And then insure me. Yeah, that's
Because you
perfect.
want to make the most out of what you have.
Exactly.
What's the mortgage value on your condo right now?
180.
Okay. So what I'm going to do now is I'm going to go through just a quick summary of the expenses that you need to cover. So $180,000 mortgage, if something happened to one of you, I assume you want that paid off. So it's one
Yeah.
less thing to worry
Oh, yeah.
about.
That's right. Yeah.
Funeral costs. This is always a tough one, and it's hard to estimate how much it's going to cost for a funeral. Have you talked about that?
Well,
We're pretty fortunate. So I mean, Ray can explain our.
so through our religious community, we have something called a burial relief. We pay into it on a yearly basis as a community, and they take care of it from start to finish.
Oh.
So we actually don't need to worry about any of that.
So you really have a prearranged and pre-planned and prepaid
Yeah.
funeral.
That's
Yeah.
right. Yeah.
Okay, so that's zero. That's great. Now, income replacement. Let's just pretend you've got that one child tomorrow.
Okay.
That's a really
That's
quick period.
That's instant. The stork stopped
Instant
by.
child, and one of you dies.
Okay.
Horrible. That child isn't going to go to school until they're 5.
Right?
I like to plan that one of you doesn't have to work for those first 5 years. Either that or you need to find child care.
Yeah.
So we need to cover income replacement for about a 5-year period, just to be safe.
Okay.
So do you know what kind of income you might need
Well,
if there was just one of you?
collectively right now, we bring in probably just over $100,000 a year between the two of us.
Okay.
So I'm not sure how the math would work out on that.
Well, I'm going to then pick a number of about 80,000. 70 might be okay, but I'd rather plan a little bit safer. You're in business for self, and your business is booming because you're selling tons of Sybil sofas. So your income's going to go through the roof.
That's right.
So let's plan for $80,000 a year for 5 years. So that's $400,000.
Okay.
Do either of you have life insurance already through work?
I have for both of us through my work.
And how much is that?
For him, I think it's what, $10,000?
Okay,
Wow.
so not much.
No,
That's
but
great.
for me, it would be 150.
Okay.
So who gets
So you're
150?
partially
You do.
covered there. So if we look up your total, you want $400,000 for income replacement. You want $180,000 to cover your mortgage.
Yeah.
You should factor in funds for other expenses like retirement and education savings. Then we could subtract the existing insurance, and that'll leave you with a need of about $700,000.
Yeah.
Now, there's lots of different options, but the most inexpensive option is going to be term insurance. So we're going to look at a 20-year term because that'll get you pretty close to the term of your mortgage. And basically, that would cost you roughly about $80 a month.
Wow.
And you'd be covered for
No, that's
20
not
years.
doable.
Is that doable?
Oh, yeah.
That's very affordable.
And then that way you can put your extra money aside into savings because you got to plan for that trip to Greece and you got to
right.
plan for retirement and you got to plan for Little League and hockey dues or dance lessons
We
or
have had a kid overnight, haven't we?
yeah, or whatever else you need. So one of the biggest mistakes people make is they procrastinate on insurance because nobody likes talking about death. But you need to do it as soon as possible because you may not be insurable down the road. So you guys are well on your way. You're starting now.
Thank you.
Thank you, Raheem and Ray.